We are
live.
We are live.
Living it up.
What is going on, guys? This is our third live stream that we've done. This one has a bunch of anticipation. We have been posting a bunch of stuff over the last week and telling all of our wholesale friends as to what is going on, and we have some exciting people that we're going to be speaking to today. We're going to be speaking to Calvert Mortgage Group. We're basically just going to let everybody come on in. It's going to take a few minutes, but once we have a big enough group, we're going to start the presentation. Specifically, this presentation or this live stream is going to be on a new flip product that we're bringing to market. There are a few brokers in Ontario who have access to this product, but we wanted to spread the word and make sure that all of you were able to see us. I'm going to bring them in here. There we go. And we're going to bring them in on our live stream as well.
Here we go.
What is going on, guys?
Hello, gentlemen.
Uh-oh.
She's a little echoey.
She's echoey. One
Hey,
second.
we just turn our volume off. Turn it off.
There we go.
Yep, we're good. All good?
Perfect. Hey, guys.
Hello.
What is going on?
Just jumping on the live stream with you guys.
Oh, you guys gonna have to turn your volume down. There we go.
Yeah. We got a guy figuring that out here right now.
Just yeah, there you go. Perfect. Everybody who's on the live stream, just give us a second. We're just getting this all set up. Perfect.
It's off. Good.
I'm going to think about a product. That's all it is. We just
Yeah. Well, anybody who's sitting here listening, we're just getting this set up. So there's a few things that we're going to be going through today. One of them is the actual product. We're going to go through why this is a great product, how this is going to help you guys, how it's changing barriers to enter the market. And we're also going to have Rebecca Matheson on, who's going to talk about some deals that possibly would have worked for this specific product. We are looking forward to all of you reaching out. We had an overwhelming group of people who reached out to us over the last few days who are interested in this product. So I guess we want to start first with you guys. I know you guys are working on your Instagram thing at the moment, but
Yeah.
Tell us a little bit about who you are, what you do.
Yeah, sounds good. Sounds good. So we are Calvert Home Mortgage Investment Corporation. We are a mortgage investment corporation lending money privately. We've been in the lending business for over 35 years now. Up into July of 2020, our focus was just Alberta. We love to lend to real estate investors. So that could be flippers. That could be we define flippers all in the same. Like in Ontario, you guys call them BRRR clients or flippers.
Yeah.
Either you're flipping to refinance or you're flipping to sell, as far as we're concerned.
Perfect.
So we support either model. We have a program that is specifically tailored to that I think we'll chat mostly on today, which is the 10 grand down product, or sorry, 20 grand down product.
Down. I'm just going to pause you for a second. I just need you guys to request to join our live stream on Instagram as well.
Okay. We're doing that right now.
Perfect.
Hopefully.
We got a few people on here, quite a bit of people,
18?
19 people on Instagram.
I know 100 people left the comments. We should have 100 people in the live stream as well.
Give us a second, guys. We're just
no problem.
Perfect. We'll wave at all you guys. Hope you are all doing well and looking forward to hearing what Calvert has to
Everyone got
offer.
to enjoy the 20-degree weather we had today in Ontario too.
Yeah.
Change from the
That's
snow.
great. There we go. Perfect.
Okay. Are you guys getting an echo from us?
Just from you, yeah. Can you just turn the volume down on the iPad?
Yeah. We're gonna. You know what? I'm gonna turn the volume off on this thing.
Sure.
How's that?
Back. I still got backfeed. There we go. Better.
We're good.
Yeah, we're good. We're good, guys. We are good. You're perfect.
Awesome.
All right, so just continue with who you are, what you do, what you're offering.
Okay, sounds good. So
Put it on mute. I don't know why this isn't working.
boys, let me try. Sorry, guys.
It's
No,
all
it's
good.
Audience.
All good. It happens.
Let me just see if I can do it by my phone rather than this apparently antiquated iPad.
All good in the hood.
True investors will stick around. Sometimes.
That's right. Got a bunch of people. There we go, Jesse. Perfect.
Let's see if this works.
Yeah, all good. To all of our people streaming currently, just give us 1 minute, guys.
Oh, hard.
I just requested to join personally. Let's see if that works.
I got nothing yet. All right, guys. Nothing yet.
When mute doesn't mean mute.
No, it does not. Sorry, guys. Hang tight 1 sec. Hey, what's going on? How are you? Doing well. I don't have anything yet, Jesse.
Really? Okay.
Really?
Did.
Hey, guys, if any of you guys also follow us on YouTube or on Facebook, feel free to jump on there as well if this isn't working for you guys. We are streaming from all the platforms as well. Apologize about the delay.
Okay. Here, log me to Calvert.
I got it.
Okay. But everybody can hear us. They just can't see us. Is that the case?
Yeah, they can't hear you. They can't see you guys.
Okay. Maybe if
we can wait a few minutes. Appreciate it.
but everybody can hear us.
Yeah, you guys can hear. Yeah, they can hear you guys.
Okay. Well, maybe I'll just continue until we figure out this Instagram fiasco.
Let's continue. Let's do it.
Okay, cool. Been around servicing flippers, BRR clients for a long time. We take pride in understanding their business and providing solutions that best suit their needs. Could be something like the 20 grand down product that we'll get into today. Could be opportunities where we're leveraging properties they currently own to suit their needs, and everything in between.
Perfect.
Are we in?
We're working on it right now. 1 sec.
Okay.
We're waiting. They being ambitiously waiting, so they can wait 1 more second. There we go.
How's that?
I think that's a little bit better.
Perfect.
Are you getting feedback?
I'm not getting any feedback. We're good, guys.
Okay.
Wow. Perfect. There we go.
No problem. Technical difficulties.
It's only
It happens.
2020.
It happens to the best of us. Well, I know a lot of the people here are excited to hear about the product specifically. So just go through, the product, the qualification, how it works.
Yeah, for sure. So we're super excited to be lending into Ontario. We believe the market conditions there are perfect for flippers and BRR clients to be profitable. In a lot of your markets where we're seeing appreciation, it makes it even more exciting for us as lenders to be part of, especially lenders that are used to the Alberta market where we're seeing prices go down, 5% year over year for the past 5 years.
Right.
So at first when we entered Ontario, we were more market focused. We had identified opportunities in Kitchener, Waterloo, Guelph, London. We really liked Hamilton, Windsor. But as we've learned the market and understand the opportunities, we're more focused on lending to quality flippers.
Right.
So people that understand their business, people that are identifying awesome opportunities, and it's not as market specific. So in terms of the product, where we're focusing on lending to flippers with 20 grand down, we really qualify the flippers in 2 ways. Is first and foremost, are they going to be profitable? So when we're running our numbers, we're factoring in financing costs, we're factoring in real estate fees. You guys in Ontario have the silly land transfer tax. We're building that into the equation. We're thinking through monthly costs like utilities, insurance, everything. And when we do the analysis, we look at what the after repaired value is, and we understand how much net profit is the client going to make. And the only way we're doing the deal is if the client is truly going to be profitable.
Right.
We don't want to see them buying themselves a job, or even worse, getting into a losing position. How is volume, guys?
Good on our end. Yeah.
We're good on your end. Yeah, they just looks like everybody's good on their end. So
Awesome.
Perfect.
And then when you guys are talking about flippers, obviously, just for some people who weren't there, you guys are talking about both the BRR strategy and traditional flippers as well too. So this product can be for both scenarios.
Yeah,
exactly. Yeah. What I was saying is when we refer to flippers as one batch, whether you're buying to sell or buying to renovate, we consider it the same thing. Buying to sell or buying to refinance. It's still a flip. We're still providing our capital short term in order to get, whether you're doing BRRR or flips, we're considering it a flip. So again, going back to qualification, it is the client going to be profitable? If they're going to be profitable, we want in. So then we of course look at the individual. We look at credit. We look at we really look at credit, NOA, and application. And we can forgive a lot of typical issues that your banks and even your private lenders won't forgive as it relates to credit, as it relates to income ratios, as it relates to the application. We can forgive a lot. What we can't forgive is if you're completely delinquent and totally maxed out on credit and missing payments left, right, and center, and there's no hope of you making payments. So if the flip is profitable, we're in, as long as the applicant is not a complete disaster. No offense to complete disasters. Okay. I wonder if we just leave it on. Is it going to work if we just do the Instagram feed and bail from this other feed? How? Well, we can't get this to mute my phone on Instagram. How do you get this off?
You need both devices?
No, we want this muted totally.
But do you have to have both on?
We're gonna find out. Get this off. Hit that.
I need to get the microphone off. How do you turn off the microphone?
You'd have to go into the settings for whatever app you're using and not allow it to use the microphone.
Okay, hang on a sec.
Okay, guys, sorry, we're just trying to figure this out, or else we'll just go straight in.
Oh, and they're gone. Oh, there they are. Perfect. I can't hear you guys.
What's a good live stream without some audio?
Yeah, what's a good live stream?
Just build up the tension.
Gotta love technology. Leah, thanks for being understanding. We appreciate it. There we go. We have people coming in through other avenues. While we wait for technical issues, some of the things that we found were important with this specific product. We had a lot of people reaching out, and one of the things that most of the flippers that we deal with reach out with us for is specifically because of down payment requirements. Yeah. And what we're trying to do with this specific product is kind of smash that barrier to entry, right? So one of the most important things that we hear from is, well, I have the down payment or I have the renovations cost, but I don't have both. I can't do both. So how do you put 20% down on a $500,000 home and have the renovation costs?
Yeah, and then a lot of the options that the investors are looking to is going to some sort of joint venture partnership, which can be a great option, but you obviously take a look into some sort of profit sharing, and maybe that starts eating into getting some of your equity back to be able to pay off the line of credit that you put the renovations on, or if you're in this to obviously build up your capital reserves to be able to start making some buy and hold and some more turnkey properties. Obviously, you guys want to be able to keep as much equity as possible. So this, it gives you guys an option to be able to get away from a potential joint venture and get the flips done and the burrs done yourself, and put more of that equity and more of that profit back into your pockets.
Yeah. Hey guys, you guys are muted at the moment. Can you guys hear us? You got to unmute yourself.
We don't have an Insta Live setup. Is that right?
That's right. We took ours
It's all good. We turned it off. Everybody's gonna just watch us through here. We can just continue with the thing.
Okay.
And we told everybody to move to Facebook and to YouTube. So those guys are making their way over now. So let's just continue where we left off in regards to qualification. How do you guys qualify somebody? Like, how does that work?
Okay, sounds good. So we were just sitting on qualification. First, the biggest hurdle always is finding a profitable property, which the reason we're super pumped to be working with Family Mortgage Group is we know you guys work with awesome wholesalers who set their flippers and BRR clients up for success. So once they find that, we talked about, we want to see an application and a credit and their NOAs, which Finley will collect from the borrowers and supply to us. And then the next step is really the cash to execute. So we talk about the 20 grand down. That's a necessity. You also have to have the cash to execute your rental plan. So if you're going to do a renovation for, let's say, 30K, we want to see that you have access to that. It doesn't necessarily have to be cash in your bank account. It could be lines of credit cards, joint venture partners. We're okay with second mortgages going behind us to cover that.
As long as they have the capacity and ability to be able to do the project and can show you that it can be done, they're basically, they're good to go.
We're good to go. Yeah.
And you guys have a unique qualification system too, where you guys qualify someone once per year, right?
Correct. Hopefully we get to work with flippers multiple times throughout the year. We only need the app credit and NOA annually.
Right. Perfect.
And so you guys specifically use the NOA to find out just that they're paying taxes or they don't owe any taxes, correct?
Correct.
Yeah, not looking to qualify as the typical bank with, making sure debt ratios and stuff are in line. You guys obviously do a bit of a due diligence, like you said there, just making sure that the borrower obviously has the capacity to be able to go forward. We don't want to be putting someone in something where they're going to be, stuck with some sort of long-term debt and kind of ruin it moving forward, but just some basic due diligence.
Yeah, and that's the main thing with this. But the key takeaways are that there's no minimum income, there's no minimum beacon. We understand that not everybody's going to be a sterling borrower. The main thing is that we need to see that the project has the ability to succeed. So when we're looking at the credit bureau or we're looking at tax liability, do we see something that could derail this project? Because at the end of the day, we only want to help people do good deals. We don't want people to lose money or break even. So that's why we look at that.
Yeah, exactly.
I saw somebody type a question in, and they're saying, well, their labor costs could be cheaper. And doing it with their
he's interested in doing it, and he wants to save the cost and do it himself. How would you guys take a look at that?
That's an awesome question, and that's something that we get a lot. So in those scenarios, when we're accounting for your renovation budget, we would just be looking at your hard costs. So depending on what you're going to pay your guys, it could be below market because it could be a cash type job, or you could be getting yours out on the sale or on the refi. So we'll discuss that with the borrower in the interview and just ask them, what are your hard costs going to be to get this job done? And then we'll talk about labor, and we'll work that into our number when we're going through the profitability. So we know that everybody's business plan is going to be different. And at the end of the day, if there's a way to find a profitable deal, we're going to look to support that however we can.
Right. And what kind of supporting? Sorry, Jesse, but what kind of supporting documents do you guys take a look for on the quotes from contract? Do you guys need a hard copy of a quote, or what are you guys looking for to verify that way?
It depends on their level of expertise. So we love working with the tradespeople that are going to do the bulk of the work themselves, because they have their numbers dialed in, and it's really just hard costs. So for a tradesperson that's going to do the bulk of the work themselves, we just want them to outline what they're going to do to the property, a figure that supports that, and give us enough information to envision what the as complete value is, because we do a lot of work understanding the as complete value, looking into comparables, and making sure that indeed what they envision the as complete value is going to be, that's what it ends up at. So as it relates to budget, if you're hiring trades and there's going to be like a big line item for plumbing, we would love for you to have a quote as it relates to plumbing, but it's not a necessity. So it varies and it's client specific. So if we're working with a seasoned tradesperson, they know their quotes inside and out, we're fine for them to say like as vague as kitchen, 20 grand, and IKEA counters and granite countertop. So we know what IKEA counters and a granite countertop looks like.
Yeah.
Flooring, $5 a square foot. We know what $5 a square foot flooring looks like. Stuff like that. So we always want our borrower, as part of the submission, we want the borrowers to give us the budget. We would love for them to give us the flip analyzer that the Finley Group has and is going to share with all their wholesalers and end users. We want to know approximately what they're going to buy it at. If it's a straightforward wholesaler deal, they know exactly what their purchase price is. If they're going into negotiations with the seller, we want to know what their top price is going to be. And then we also would love to see them have an as renovated value. What we like about working with wholesalers is usually they're doing a lot of that due diligence for the borrower, where they're supplying some comps and giving an estimate of the as complete value.
Perfect. Yeah. So Don's got one more question, then we're going to get into the actual product again. But Don asked, do you finance wholesale deals and the wholesale fees? That's a great question. We actually were speaking about that before the live stream came on, but Jesse, you can probably answer that one.
We do. So the way that we look at the wholesale purchase is that is the purchase price. So we're lending at purchase price with the borrower putting in 20 grand. So let's say the wholesale fee was 30 and they already have 30 down. We can that's their down payment. We're off to the races.
Yeah.
That's
so
awesome.
And if it worked for you guys, and like say you put like the wholesale fee was 70,000, you put 35 down, and you only wanted to put $20,000 down on the property, when it came to funding, they might be able to actually give you the remainder of that back if you guys needed it to do the project. So, I mean, as we say before, each project's unique, and it's important to really analyze each product and see how it's going to work out. So there are a handful of options available to you guys. We'll get to some questions in a second, but let's get through the product real quick so everybody can at least understand how it works. So in regards to the term, how long is the term of this product?
We do 6 months, fully open, interest-only payments. Fee is always 2%. Rate is 15.5 annualized. So the borrower is paying 1.29% per month. Hopefully they're in and out in under 4 months is kind of our ideal timeline. So we love to see the borrower either execute the refinance on the BRRR or sell the flip within 4 months. Of course, if it goes 5 months, 6 months, no problem. If it goes longer than 6 months, no issue either. We renew at no cost. There's also really no documentation left for us to renew. It's simply, we issue the renewal. It's a one-page document. As long as they're paying us and there's no real issue with the project, we renew at no cost. So yeah, that's the term. One thing we missed is we do lend to corporations. No problem there.
Cool.
So the rule is we always have the shareholder provide a personal guarantee. So if it's Joe and Mary are the shareholders, and 123 Ontario Limited is buying, 123 Ontario Limited will be our borrower, Joe and Mary will be our personal guarantors. If it's an active company, we'll want to see financials, and we'll want to see that GST is current. GST can be a nuisance to mortgage lenders in that it can supersede our mortgage.
Mm-hmm.
So we want to check that risk off. Also, if the client has employees, we want to see that employee source deductions are being paid. So borrowing from a corporation adds a little bit of a wrinkle, but nothing crazy.
Yeah.
You
So,
log
you're
into
probably,
my
so the
CRA.
majority of our. Oh, go ahead. Sorry.
I was just going to say it's a 2-second lift. You log into my CRA, you just go to the statement of account, you send us a screen grab, and we're good to go.
Yeah, awesome.
The majority of our clients, they're usually just purchasing or opening up a holdco and just throwing the property in a holdco anyways. Like we're not really taking a look at most files that are doing it through an operating company. So
Yeah, the biggest part, the operating companies, you're gonna have a hell of a time trying to refinance that out afterwards if you're
Right.
for sure.
Right.
In regards to lending area, where do you guys lend?
Like I said, when we first entered Ontario, we were very focused on the geography, being Kitchener, Waterloo, Guelph, Cambridge, London,
Toronto,
Hamilton, and at Windsor. But now that we understand the market a bit better, we're looking to lend to basically anywhere. Well, I shouldn't say anywhere, but any urban center. So, if it's more than 50,000 within the center, we want to participate, provided we're working with a flipper or BRR client that knows what they're doing and we believe is going to be able to execute the plan. But again, most importantly, that there's money to be made by the client.
of course.
sure.
Yeah.
Do you guys have a maximum loan amount? So like if I got obviously $20,000 down it's a great thing, but what if I come to you and I have $1 million house that I want to buy, and I think that's a lot of uplift, and I'm maybe it's worth 1.3, 1.4, and I want to put some money into it. How does that work if it's a big dollar value property?
Really good question. And we don't have a perfect answer, but we have an answer. So we really avoid lending against unique properties. So if it's a $400,000 market and you're looking to flip or BRR $800,000 single family residence, that's an outlier of a property. There's going to be less liquidity. It's going to be harder to value. We would prefer to stay away from that, but we'll still support it. And the way that we support it is by taking a little bit of our risk off the table. So we'll probably just require more down payment.
Okay.
Rule of thumb, we'll do up to $700,000 with the $20,000 down. And then once it goes over that, we want 5 to 10% down. So I just got off the phone this morning with a lady who's GTA, and she's looking at those million plus. And basically, we set the expectations. Expect to put a maximum 10% down. So if you're buying for one, expect to put $110,000 down.
Gotcha. Makes sense.
Cool. And if we have some I know we get a lot of guys who are looking to, purchase mid applications of other purchases. If you have flippers who are looking to, maybe they came in some capital and the opportunity is just too good. If they have a current flip undergo with you guys, are they able to apply for a secondary funding on another property with you guys, or how do you guys take those into consideration?
Absolutely. Our ideal flipper is a flipper that's doing multiple projects and 10 plus a year. And by requiring only the $20,000 down, we believe we're giving them the opportunity to act on those deals. Like we talked about before, we believe the hardest part of flipping is finding the right deals. So by reducing the amount down, we're providing more cash available to the flippers to do volume. So we work with flippers here in Calgary that are doing 10, 20 a year, and they may not be borrowing from us on every deal. They may have bank facilities. They may have Uncle Joe that's lending them money at 6%. By all means, but we're a big part of their business model, and we're a big supporter of theirs. So yeah, we do want to do volume. That's our ideal client. I'll caveat that by saying, if they're new to flipping, we don't really want to see them be doing 3-4 at a time at the beginning. But if they're proving their model and they're experienced, we really want to do volume.
For sure.
Perfect. We got a lot of guys who are looking for some serious opportunity in the market, and most of them aren't just doing one. So if we could find a way to exponentially grow their business by kind of lowering that barrier to enter the market for multiple deals, most people would be seriously interested in taking this product into consideration.
Yeah.
Get more than meaning working at once.
For sure. Yeah. Keep your money active, right?
Benefit that we hear. Just the biggest thing is understanding their ability to manage multiple properties at the same time, multiple projects. Do they have a plan? Do they have crews? Do they have an idea of what they're doing? We can address that in a 5-minute phone call. Just want to understand that. And if it makes sense, it makes sense. And we're happy to support those multiple at the same time.
Perfect. Adam actually had a question real quick. How long does the application process take from like application to funded? Should we get the application in and make sure everything is taken care of so everything runs smoothly?
Yeah. So what we love to do is qualify the flips in 2 parts, if you will. So anybody who's interested, we'd love to see an app, credit bureau, most recent NOA. So then we can kind of give you the green light to go shopping. And at that same time, we'll ask, what kind of price point are you looking to shop in? What type of renovations would you be looking to do? So then we can kind of sniff out whether or not they have the required capital to work through the deal. We'd hate to send somebody shopping only for them to realize that they don't have the funds to complete the project.
Mm-hmm.
So we'd address that up front. Once I get that information in a quick 5-minute call, I'll give them the thumbs up within a minute. We know what we're looking for.
We turn the pre-approval around like that.
It's instant. So you don't need to worry about that. And then in terms of the actual funding itself, once you get a property under contract, so I guess the next step would be, because a lot of the time in Ontario, you can't go in with conditions. So we would have a quick phone call. This is what our max purchase price would be. This is what we think the ARV would be. This would be the reno budget. We run through the quick numbers and say, okay, you bring back a purchase price of this, and you get it under contract. I would condition a minimum approved value of X to ensure their profitability. We order the appraisal with their reno quote. That comes back. We'll instruct the lawyer right away, and usually, we can fund within 3 business days, give or take. So we'll keep it moving as quickly as possible, and we're working on some pretty exciting stuff there to move that along even faster.
The only thing slowing us down on the 3 business days is how fast the legal process, or lack of quickness, the legal process is in Ontario.
Yeah.
Here in Alberta, we do not need separate ILR, so we can just instruct the borrower's lawyer, and we have invested in our legal capacity to do so. So we can literally instruct same day. We're working with the law. We're working with the Law Society of Ontario to be considered a institutional lender, which, from our reading of the Law Society's requirements, there should be no issues. So we hope to be able to eliminate the necessity for us to use a lawyer and simply instruct the borrower's lawyer, which will reduce friction, time, and cost for your borrowers.
Absolutely. Yeah.
Perfect.
That's awesome.
Yeah. Go ahead.
Sorry, guys. One thing on the pre-approval, for the BRR clients that have a portfolio of properties, we want to do a rent roll. And the reason is we can get really creative with clients that have equity in other properties. We can blanket stuff to bring down the rate. We could blanket stuff to bring down the necessity for them to put any money into the property on purchase. So we like to understand the client's full picture in order to create a strategy that best fits their needs. We could even create collateral mortgage charges where we lend one charge on a property that's going to be a consistent of theirs, and then move flips in and out as the client needs it.
Almost as like a home equity line of credit, almost, where you can use it to as equity. So we preach it a lot in our content is cross collateralization. We help a lot of people use pieces of property and equity to be able to do things that most banks or other financial institutions can't do, and we're preaching to them that being able to use the equity that's tied up, you might as well use it instead of putting all your capital and having dormant capital, right? So just that is great to hear.
Definitely. And I know this is going to get asked a lot too, because I know we get a lot of questions about promissory notes and stuff like that. Are you guys able to use promissory notes for either the renovation costs or the down payment? Have you guys run into that before?
Yeah. A lot of the time you have, call it a working partner and a money partner. So when we talked about those project funds and how we're verifying that they have the ability to complete the project, a lot of the time it comes from somebody who's not going on title. So if I see that bank statement or that prom note or whatever, just need to see a JV agreement or that prom note saying, hey, I have an agreement on this project, something that's linking the capital to the project. And as long as that can be provided, we're good to check that box and keep it moving.
Yeah.
Eric Mulpey actually just quickly asked a question on Facebook. He said, will there be extra qualifications / steps for first-time home buyers or flippers, investors?
No,
not really. We just want to understand a bit about why you're looking to getting the flips and your due diligence that you've done to ensure success. But otherwise, there's no other additional due diligence.
Yeah. I think Josh and I, just to kind of touch on what you guys have stated there, is obviously putting together a package beforehand and being prepared, having a little bio about yourself. If you guys have all that stuff together and you can show a strong package, that makes the process much quicker and easier on your guys' end to be able to just validate who's coming to you for a loan.
Yeah, guys. So like if you're an account executive somewhere like TD or BMO, or like, you work in finance or you work in tech, and you have like a full-time job, guys, like, how are you going to do the flip? So, I mean, are you going to hire somebody to do it? Because, you telling us and telling Calvert that you can do this by yourself when you have a full-time executive job, that doesn't work, guys. So like, how are you going to do it? We just got to walk through it. We're here for flexible financing. They're here for flexible financing. So it's just a matter of putting your stuff together and making sure you just have everything in one package.
Totally. So it's always best if you're at all interested, there's no cost. Get your information into Finley, have them send it to us, get the pre-approval done, get the interview out of the way, and then all you're doing is looking for properties and getting ready to execute. We love working with first-time flippers because what we love to do is provide our expertise for the success of others. So first-time flippers working through, like with your downtown account exec at RBC, who likes the idea of getting into real estate but isn't quite sure on how to execute. We've executed hundreds of deals and hundreds of millions of dollars worth of lending. We can ask those questions, help you think through what you need as part of your team, although we know that Finley and the wholesale group are going to help you with that too. But we pride ourselves on giving you as much expertise as possible in order to set you up for success. So, get your information in, get Finley to have us pre-approve you, and then you're just looking to execute on the purchases.
Yeah, that's awesome.
Perfect. Yeah, guys. So if you guys, we're going to try, I don't know if you can post an actual PDF, but reach out to us, either DM us or shoot us an email. We'd be happy to send you the PDF application documents, or we can set up a phone call to talk about what that looks like. As soon as we get that ball rolling, you guys can start looking at some opportunities and flips that some of the wholesalers have. Now, that being said, we actually have Rebecca, who's going to be coming on after these guys to talk about some opportunities that possibly have already passed or are coming up that you guys can take advantage of.
Some off-market deals. Now, you guys mentioned you might have a couple slides. Is there some stuff on those slides that you guys want to bring up that we haven't quite touched on, or maybe you guys think is information for everyone?
I wanted to touch on the BRRRR, because that seems to be the buy reno refi.
Yeah.
This is one that I did where somebody made $223,000 in 40 days.
There you go.
Yeah, not bad. So if you can just put up that screen share and let me know when I'm good there.
Yeah, we have some magical people in the background. Do you see the button screen share on the bottom of your screen?
I got a request. Hang on.
All right, perfect.
Okay. Screen share. Okay.
Yeah, we're just gonna run the audience through a couple examples of some successful, one on the actual sales side and then one on the BRR side. Is that right?
Yeah, awesome.
That we recently did for clients. So there we go.
Okay.
We're sharing our screen.
Awesome. Perfect.
So I guess we'll show one flip and one BRRRR. But this is one that we did in Alberta. The purchase price, they put a little bit more down to buy down the rate in this case, but the purchase price was $311. They put down 81. Their reno budget was just under 60 grand. Purchase to sale date 182 days. They sold for 453 and they made just under 50 grand in 6 months. This one, because they put down a little bit more, the loan amount was 230,000. They bought down the rate to 12.5. This is a fully open mortgage, so there's no prepayment penalty or anything to that effect. And the commitment fee in this case was 3,400 before and the after too. It's pretty cool seeing what people can come up with when they go into a project like that, the after vision.
And keep in mind that's in Alberta where prices are going the opposite way as Ontario.
Upward time adjustments. It's a pretty cool thing. This is the most profitable deal that I've underwritten personally. So in this case, the purchase price was $427,500. I've blacked out all of the documents, but I wanted to get everything in here so you guys could see that this is a very true, live, and recent deal. The initial purchase date was April 30th. You can see the initial purchase price there. The amendment came in, so they lowered it down a little bit. The rental quote came in at $68K. I beefed it up just a little bit in case there were some cost overruns. They said that there were, but I'm not trying to paint too rosy of a picture here. And then a few days later, we see June 8th, the appraisal came in at $750.
Wow.
So 1.5 months, a little bit of an over budget, but you can see there too, the profit that they built in. The broker then took this refi appraisal. They refinanced all of their money back out. So all of their rental costs, all of their carrying costs and more. And now they're shopping for the next flip.
Awesome.
So that's another way that we can help you guys out is if you guys do awesome on a project like this, and you guys want to do more, they can help you out on the refi, get that cash back out and keep turning, burning that cash.
That's awesome.
That's the idea, guys. Do 1, do 2, and turn into 4, turn into 8, turn into 10. Continuously cycle your money and have your money work for you. And this is exactly what this product is going to allow you guys to do.
And then just one quick thing before I turn it back over to you guys. It's really important that you guys know what your numbers are. So your purchase costs, your financing costs, your operating costs, your rental budget, your selling costs. And the good thing about working with us is that we have this awesome flip analyzer tool that outlines everything for you guys. This does all of the thinking. So you literally only have to put in what your reno time is, how long you think it'll take to sell, what your budget is, your purchase price, your down payment, and then it spits out what we think the profit could be. And then including if it takes one additional month or one less month. But one thing I'm learning is that good properties move quickly in your market. But this is a tool that we're happy to share with anybody who reaches out to Finley. We think this is a great tool, and this is what we use internally to break through profits.
Yeah, we really welcome you guys to use it, leverage it, share it amongst your networks. Finley has it in their hands. They've taken the time to understand it. We're always happy to jump on a call and guide you through any questions, but it's a super easy tool to use. There's great instructions, and really you're just filling out a couple Excel cells that need filling out, and it'll spit out your profitability. It'll look at how time affects that. It'll look at a month, if you were to do it a month sooner or a month later, and literally have every single line item cost. It's amazing how many flippers forget that they have to pay real estate costs, or that there's legal costs associated, or that there's a land transfer tax. Even small things like insuring the property or utilities,
Snow removal.
Yeah.
In the winter.
Yeah, the landscape.
Everything. And that's another thing too, whenever we get an application, we'll ask you if you've considered these things, what these costs are. If it's a super juicy flip, we're probably not going to ask a lot of questions. We'll just get you the commitment and say, hey, go make money. We're pumped for you. If it's a little bit slim, or if it's not as much as you thought it would be, that's when we'll start asking those questions. Be like, okay, what are the true, what's the true value of the cost? And let's really get a sense for, dig into the detail to make sure that we're doing a good buy.
Yeah, absolutely.
For sure. Exciting stuff. So guys, we have the flip analyzer with us. You can call us. We can go through it together. I can send it to you. We can go through that with your application. This is a really great tool to be able to break down all the costs. As the guys were saying, I've seen handfuls of spreadsheets. I've never seen one this in depth. It literally takes care of, what's it going to cost to sell, to buy, your carrying costs for the duration of the loan you're going to be carrying it for. It breaks it down to very, very specific numbers, and it's going to help you guys be more accurate when you're looking to make a purchase with one of the wholesalers.
Yeah, absolutely, guys. I mean, you guys know, the viewers, we're always open with our social media and our phone numbers. So if you guys have questions and you guys are looking to, like Calvert Home Mortgages has said, put in the pre-approval, like we can get the numbers working ahead of time and get you guys an okay within the range that you're looking for and get you guys on your journey, and you can start taking a look, for that next flip, for that next burr. Definitely don't be afraid to reach out and just ask, to see where the numbers are and where you guys need to be. And then from there, quick turnaround times after we get the application and the process started. So we're excited about it. Definitely. We've had a lot of people reach out, and we think it's, this could be the next tool to put in everybody's, toolbox to start putting some capital back into their banks as well too. And especially for those who are looking to, get into some long-term buy and holds and turnkeys. If you're short on the upfront capital, and you're looking for a way to build that capital, maybe take a look at getting into the flipping, working with maybe a JV who has some experience, or taking advantage of the knowledge that Calvert Home they offer. They've been around. You guys have been operating for almost 30, 40 years now, right? As a
lender, 36 years as a lender.
Mm-hmm. So tons of experience. You guys have probably seen the entire range of scopes that you're going to see on flips and burrs. So definitely, take advantage of that. And if you guys have questions or you're just looking, like I said, put in, reach out. We can get the application started, give you guys an idea as to where you need to be and where that ARV needs to be, and get you on your journey for sure.
Perfect. All right, guys, do you guys have anything else you guys think we missed or wanted to say about the product?
I'll just add one thing.
Yeah.
So a lot of the time when you're going to be buying off market from a distressed seller, the property might not be in the best condition. So a lot of other lenders, a lot of other banks, they're not going to lend on properties that are appraising at poor to fair condition. We will, provided that the rental plan can address that.
Right.
That's another thing that I wanted to highlight too. We've seen AAA clients with tons of cash find an awesome opportunity only to get declined by 3 banks, and they wind up working with us because we're able to look at that as complete vision. We're not lending on what it is today. We're lending on what you're going to turn it into. So provided that the renovation plan can address the deficiencies in the project today, we're happy to lend on that.
Yeah.
Awesome.
Yeah. Super. We're, like we said, fast turnaround times. We've created our model to support flipper and burr business. Consistent. We're always here. We always have capital. We're always going to turn our deals around quickly. Let's just start doing business together.
100%.
Let's do it, guys. Again, we appreciate your time, guys. I'm sure we'll be in contact. Maybe we'll do another one of these in a few months just to see how things are going. Give us any updates.
Idea.
I know you guys are working on some pretty interesting stuff for the future, so we will also get you back on here when we have a little bit of progress on those things that you're working on. I'm sure everybody would love an update. Until then, appreciate the time, guys.
Sounds great. Thanks
For having us. Appreciate it.
Thanks for joining, guys.
Awesome. All right, so everybody else, we're gonna have Rebecca on here in a second. We're gonna go over some
off-market deals that they have.
Yeah, an off-market deal. We're gonna go over some things that possibly, or some projects that this specifically would work for. So we're just gonna get Rebecca on here in a second.
Magic.
What's going on, Rebecca? Oh, you're muted.
Oh, here we go.
What's going on?
Okay, what's going on, guys?
We're good. How are you?
I'm doing really well. That was an awesome presentation. I'm super excited about this product with the Calvert Home Mortgage team, because I've had so many investors just talk about different strategies for financing. So it's so great to hear that you guys are providing a solution.
Yeah, there's always a solution. It's just a matter of finding it, right? So it's just so what we try to do specifically. We're trying to make our inroads into the conventional financing and teach them about the opportunity that really is out there right now with wholesaling. And as long as the true value is there, and you work with somebody who understands the true value of real estate, we're able to get these deals done. So we wanted to find a way. To make sure that you guys could get financing. And that's why Rebecca's on here right now, is because Rebecca's going to talk about maybe some deals that they had on the market or have off the market and that we could possibly use today.
Absolutely. Absolutely. Well, first of all, guys, I'm just going to introduce myself. So I'm on Matt McKeever and Adam JD Martin's wholesale team. So my role is specifically in that dispositions and marketing side. So we have our wholesalers out finding those off-market deals, and I get to connect with the investors and ultimately kind of bridge that gap and make sure that they're getting into those deals that are a good fit for them. So today I'm just going to highlight a few of the deals that we've done over the past month or so that would have been a perfect fit for this mortgage product. So I'm just going to screen share here, and I just have the buyer's packages just so that you guys are able to follow along with me as I'm talking through the deals. So I'm just going to hop onto screen share here. One thing that I will also mention, guys, is this coming Wednesday, we're going to be doing a pop-up webinar with the Finlay team. So stay tuned for that. I'm going to be sharing the link to sign up on my Instagram page. So just make sure that you stay tuned, because we're going to be breaking down this product a little bit more and highlighting some more deals for you guys. So hopefully you can see my screen now.
There we go.
Awesome. Okay, so this deal, 7 Mill Street, this is in Woodstock. This is one that we recently assigned, and this is actually one of my favorites. I call this one the Chia Pet deal just because of the vines on the outside. But this one, we actually ended up assigning this for $285, and this one has an after repair value of $410. So there's definitely lots of room in there for those renovation costs and to still have a split at the end. So this is perfect for that burr or flip strategy. Renovations needed. This is definitely a more extensive renovation. So for an investor coming into this one, it would be perfect for them to only have to put, say, $20K down and then be able to allocate that capital towards some of these renovations. So this one needed a new kitchen, new bathroom, flooring, paint, trim, windows. You're going to have to clean up the Chia Pet vines on the outside. And there's, yeah, a little haircut, buzz cut. And there's also an opportunity in this one to add in another bedroom. So this is one of those older 1888 buildings. And we've definitely got lots of room for parking. So good condition for electrical, plumbing, steel roof in 2019. So those kind of like big expenses in terms of like plumbing and electrical, those are all in good condition. It's really those strategic renovations that you're going to be wanting to go in and do on this one. So this is just one that would be a perfect fit. And guys, feel free to jump in here and just kind of talk to how this mortgage product would work well for this deal.
Yeah, for sure. This deal looks great. I mean, from the obviously it just needs a little bit of lipstick, updating, kitchen, bathroom, flooring, paint, trim, a lot of that stuff on there you can do yourself, to be honest with you. If you have the ability to be able to put in some click flooring, some trim, some paint, the upfront cost of actually having to hire a professional to do some of these stuff would really just be limited to the large things you need to do, such as the kitchen or the bathroom, stuff like that. So it looks like there's a ton of opportunity here. 410 plus. Even if you added $50,000, you're looking at a serious payday on the back end. This is an excellent opportunity, and there's many. There's obviously many that we see weekly come across our desk like this. If you just stay tuned with Rebecca and the team, they're always finding opportunities like this to be able to get in. And now the fact that you don't need to put 20% down, this adds so much to your margin and your ability to possibly do maybe 2 or 3.
Absolutely, absolutely. And here's another fantastic example. So we work in a lot of different markets all across southwestern Ontario. So this is one in Woodstock. You guys had mentioned Windsor as another target market as well. So this is an example. This vacant fourplex, it went for $417 with that assignment fee included here. And overall in Windsor, we're seeing fourplexes going for that $527, $530 range. So again, lots of margin there for a flipper to come in and either do a flip or do that BRRRR strategy. And renovations needed. We always have a good list of those renovations that we think you would need to do. So lots of interior cosmetic work, as you had mentioned there. A lot of that stuff you can actually do on your own if you have that skill set. And then that rear patio refinishing. And then on the outside of this one, it just needed some like cosmetic work, some paint, and I'll just show you the photos down below. So that's 900 Ellesmere in Windsor. So this is another fantastic example of a deal where you would just be able to step in, and with that 20K down, when the numbers get up to that 400 range, it adds into that capital that you have available on the deal, because you just don't have to put as much down in that down payment.
For sure. It's so important to realize that, guys, there's no shortage of money in the market. There are so many people who would be willing to JV with you or to find the funds to be able to do this. $20,000. You can borrow that from a family member. You can get it from a friend. Like $20,000 is basically anybody can do this, guys. Finding a partner who is passionate about it or who wants to make some money, guys, you can definitely figure this out. And this literally smashes a barrier to entry to get into these properties. So
yeah, and remember too, guys, they include the wholesale, the fee in there as part of your down payment. So if you're putting, $15,000 or whatever it is that you're putting down for the wholesale fee, they contribute that to part of that $20,000 as well too. So you're not looking at putting down the wholesale fee and an additional $20,000. They include that as part of that. So keep that in mind too.
Yeah, and one more thing, it's basically not impossible, but it's very, very difficult to finance a wholesale deal with a conventional lender. So being able to do this, allocate small amount of capital, get it done, and then refinance out or sell it, it's almost a no-brainer. Like, why would you not do this?
Absolutely, absolutely. So you guys would definitely have that kind of knowledge base with the financing side. So what are the challenges that you guys are typically seeing with wholesale deals in that financing side?
Sure. Yeah. I mean, I can touch on this. So most lenders specifically don't finance wholesale deals, or at least the fee in general. So they'll finance the original purchase price. So you'd have to put the fee down, and then it'd be 20% of the purchase price if it was a rental property. And if it's owner occupied, it'd be a little bit different. But usually the wholesale deals that we're seeing need a little bit of love. So most of them are buying them as a rental property or some sort of flip.
Super flip, yeah, definitely. And I think the big thing too to focus on here is this is a private solution, obviously, and the whole point of the private solution is to be able to, get rid of the barriers and allow people to get into properties that they aren't typically getting into. I think we've had a couple of people who have talked about the initial upfront capital of a traditional private purchase, immediately eats into the cash flow for maybe that first year and maybe even the second year, depending on what that initial entry cost is. But taking a look at this deal, if you're putting a minimum of $20,000 down, even the fee that you're paying on this deal, it's half the fee that you're typically going to pay on any other private deal as well too. So, this could be something where if it is a BRRRR, this is going to immediately increase your time to getting into a cash flow versus a traditional private mortgage. So if that's something that you're kind of seeing on a typical private, that's somewhere around, even though the monthly payments on a typical are around 8 to 10%, these guys are a little bit higher, but you're saving 2% in fees. That initial down payment costs to only $20,000, and eventually down the road, they're going to be closing with a single lawyer. There's half your lawyer fees that you're saving as well too. So this is really removing the entry barrier, but also projecting you into cash flow a little bit quicker as well too.
Absolutely. So you mentioned something too a little bit earlier about that wholesale fee just being included. So are you saying that when an investor comes in, if that wholesale fee is say $25K, they still only have to put $20K down? Is that what I heard there?
That's correct. Yeah. So say your wholesale fee, we'll use 40,000 for example. You got to pay $40,000 up front for the deal. When you come to finance the deal, they actually only require you to put 20 down. So they would actually be able to give you the $20,000 back to be able to complete the project.
Amazing. That's great. Yeah, that definitely bridges the gap for a lot of people in that initial investment for any sort of flip or BRRRR. And that's the typical strategy that we see across a lot of our deals coming in through the wholesale team is that a lot of these deals are in a position where there's a value add, right? Because people are just wanting to get rid of these properties quickly. They're wanting to close it, not have to do any renovations in order to bring it up to its value. They really want to be in a position where they can just, close that deal and step away from it. So that's where an investor coming in has that value add potential. And being that they only have to put $20K down now with this mortgage product, it just opens up such a great opportunity for them to just continue to build their business faster.
Yeah. And if you guys if the wholesale fee is larger than the $20,000, guys, remember too, they allow you to drop that monthly interest rate or the APR rate if you put a larger down payment. So if you're already putting that wholesale fee down and it's larger, maybe take a look into consideration as what it's going to save you if you're able to drop your interest rate a little bit. If you're already paying the fee, that can be something to keep in mind as well too.
One other thing. So obviously for a flip, selling a property is your exit strategy. For a BRRRR, refinancing is your exit strategy. So before you go ahead and get into this, obviously you're going to need to talk to us. You can get this set up, but it's important for us to have your application to let you know that you can actually refinance out of this product. If you get into this and then you want to keep it, but you realize you can't refinance out of it, the exit strategy isn't going to work to help you. So we definitely obviously ask that you reach out to us preemptively before you make a purchase as well, so we can kind of guide you as to what your refinancing options are going to be.
That's awesome, guys. Yeah, the BRRRR strategy is so popular, especially with anyone who's a fan of Matt McKeever. He really loves the BRRRR strategy. So a lot of our investors that I'm speaking with, they want to get in on these sorts of strategies and these sorts of deals, especially those first-time investors. So this really opens up a platform for them to just jump on some of these deals coming through.
For sure. Yeah, guys, we're really excited about it. I know the guys from Calvert are really excited about it. I know the wholesalers are really excited about it. It's just one of those tools that we can add to our tool belt to help everybody, kind of either start or amplify their real estate investing portfolio. So if you guys have any questions, reach out to us, reach out to Rebecca, reach out to all the wholesalers, reach out to your mom, your dad, your friends, your dog, whoever you need to talk to, let them know, because this opportunity is one that is current, and we'd love to take advantage of it with you guys.
Absolutely.
That's awesome, guys. Well, thanks for having me on, and stay tuned, everyone, for Wednesday at 6 p.m. We're going to be talking to the Finlay Mortgage team once again in our pop-up webinar. So the structure of that webinar, we're going to have the first half really breaking down how this would work on a deal. And then the second half, we're just going to be talking about some of the deals that we have under contract right now. So that's Wednesday at 6 p.m. Make sure that you sign up for that webinar through Eventbrite. We're going to hop onto Zoom and definitely riff through this product a little bit more.
Looking forward to it. All right, guys, take care.
Awesome, guys.
Bye.